Welcome to our deep dive into the sole proprietorship. This is the most popular way for newcomers to start an export business because it is easy and cheap. But it comes with significant risks that you need to understand before you sign the papers. Let's break down exactly how it works. The defining feature of a sole proprietorship is that there is no legal difference between you and the company. As the saying goes, the proprietor is the business and the business is the proprietor. This means you have complete ownership and no one to question your decisions. You can make instant choices without waiting for board meetings or partners. Why do people choose this? Simple. Money. It is incredibly cheap to start. Setup costs are usually around 5,000 to 6,000 rupees. Even better, your annual maintenance, like filing taxes, will only cost you about 10,000 to 12,000 rupees a year. Compare that to a private limited company, which can cost 70,000 rupees a year just to keep open. For a self-funded beginner, this saves you a lot of capital. Now here is the scary part you must understand. Unlimited liability. Because you and the business are the same entity. If your business crashes or faces a large penalty, your personal assets are at risk. Your personal savings, fixed deposits, and property can be used to pay off business debts. There is no protection here. There are two other major downsides. First, you cannot raise money from investors because you cannot sell shares of a proprietorship. Second, the business has no continuity. If something happens to you, the business legally dies with you. You cannot simply pass the company down to your children like a family tree. The entity ends when you do. Proprietorships also have a glass ceiling on growth. If you are in the service industry, you are capped at a turnover of 20 lakh rupees. If you are selling products, the cap is 40 lakh rupees. Once you cross these limits within a financial year, you are legally required to convert your business into a private limited company or register for stricter tax norms. Ready to register? Here is your checklist. You need your PAN and Aadhaar card and make sure the spelling of your name matches exactly on both. You'll need a GST certificate, Udyam registration for MSME benefits, and your import-export code. For the bank account, you'll need a cancel check. If you are renting your office, ensure you have a no objection certificate from the landlord. Once you are running, you have to file GST. You can choose between monthly or quarterly filing. For a new export business, we highly recommend choosing quarterly filing. It saves you money on accountant fees and reduces the paperwork burden. You will also need to file income tax returns, specifically ITR 3 or ITR 4, based on your chartered accountant's advice. To summarize, if you are a newcomer, self-funded, or keeping your day job while you test the waters, sole proprietorship is the best place to start. It is low risk for your wallet, even if it is high risk for your liability. Just remember to hire a registered chartered accountant to handle your filings. Don't rely on cheap, unqualified agents. Start small, and you can always upgrade to a company later.